Welcome back to my Agent Gabe channel. I'm back here with Bob. And in our channel, we share powerful knowledge to elevate your real estate game and gain powerful strategies, a competitive edge in the Tampa Bay market. We are just going to talk now a little bit about you are thinking about buying a house. It might not be right now. You might be surprised it might be right now because you don't think you might be able to afford. So you have that spark in your mind. It's like, I'm going to buy a house. What are the things that we have to do now, even if you're thinking about buying a house 6 months later? Some people think it's like, oh, I'm going to call Gabe and then I'm going to start looking at houses. We wouldn't really recommend that.
No.
Because you know what happens? It's like, you don't really know. You might have an idea. And it can go both ways, right, Bob?
Yeah.
The person might be thinking like, oh, I can afford only $200,000. And they might be able to afford comfortably $500,000. So they're looking at $200,000. They're like sad. It's like, I want something bigger. And then they're like, oh, it's not going to work. Or they might be looking at $1 million homes. Where they have to be like, it's still in a nice home, but like in the 750 to 8. That can make a big difference. So it's good to know how much you can afford. So in order to do that, to know how much you're going to be able to afford, you have to talk with Bob. We can't be looking at houses before. Like, it's not the ideal situation. So the first thing, even if you're looking to buy a house, like in 6 months, talk with a lender. And Bob is my friend. So he's here to tell you. So somebody comes to you and they're like, oh, Bob, I'm thinking about buying a house. What are the things that are going to happen in that process?
The first thing I talk to them about is, how does their credit look? Do they know how their credit looks? And if they don't know how their credit looks, we need to find out how that looks. Everybody can pull a free credit report every year, and you can see exactly what's out there. So that's what I tell the customers to do, or I offer to pull a credit report for them. Obviously, some of them want to do it themselves, but that's the most important thing to do, because the credit affects so many decisions and so many things on buying a house these days. And there are so many things that are showing on credit reports that people aren't aware of, unfortunately.
So based on your credit, like now you check your credit, then you're gonna be checking options, because and then having the time, and this is what is smart, like to really start that process early, because then not only we are gonna talk about your credit, but then depending on your credit, you might be thinking like, oh, my credit score is low, I'm not. There are many different options to allow you to get into those brackets.
So the credit score decides what loan options you can go with. So obviously the higher your credit score, the more options you're gonna have. So it may limit that. So that's why it's so important for me to help with the client to try and get their scores the best optimal one they can and give them the most options, because that's gonna decide how much they have to put down on the property, what their loan amount's gonna be.
So there are options, right? And this is why it's so important to talk with somebody like Bob, because don't assume like my credit score is too low. Oh, this is what a high credit score, because sometimes you are aiming like for a number. After you get to a certain point, knowing your credit score is going to be able to give you like the options of where you're going to go with that, right? So if your credit score is not ideal, there's a program for that.
So there is. FHA financing will allow you to go with a lower credit score. Also, FHA is a lot of times a good option for first-time home buyers, because it's not a lot of money you have to put into it from that standpoint, and it doesn't affect your interest rate as much if you're going FHA with a lower credit score. So that's definitely an option, looking at it that way. Then you look at how much do you have to put in down payment or closing costs. And again, that's something we should decide based on what your comfort level is, what's going to give you the best interest rate, what's going to look at the best terms for you. But that's part of the process, is looking at that with the down payment. The other thing is your employment. I mean, you and I have talked about this before. You know, so many people think, oh, you know, I've been doing this job for a couple years, I'm good. Well, not necessarily. We have a lot of borrowers that during the pandemic went from W-2 to 1099. Well, basically, you became a self-employed person.
And now the rules change, right?
Now the rules change, because the guidelines for most of the lending is that you have to be 1099 or commissioned income for 2 years to show a track record after going to a salary of a W-2 income employee. That's not always the case, but again, it's good to talk to a lender about that, because they know the situation. They can look at your employment history, they can look at what your income is and say, okay, you have to do this for 2 years. You might only only have to do it for one. Show that you're under that for 1 year. But again, that's important to know up front and nothing you want to be surprised about later on.
Exactly. Yeah, so the employment is super important to know exactly where you stand. And then one thing, I've heard some lenders offering that, it's credit repair services. This is my advice that I would give to my clients. Before you go like into any of those offers that you receive, I think it's safe because you don't offer those programs.
Right.
This is why it's important to have a good lender.
Right.
That before you do anything, like if you are planning to buy a house in 6 months, it's important to talk with Bob. But like some people is like, oh, just go and do this credit repair.
Right, right.
It's not the ideal thing. Right?
Yeah, it depends on the person and the situation. Some people, obviously, it's better for them to use the credit repair if they have a lot of debt, if they have a lot of collections or something. It might just be easier to get a credit repair. But honestly, for a lot of clients and customers that I work with, sometimes it's a very easy thing to fix their credit.
Yeah.
I had a customer the other day, they had 3 credit cards and they had maxed them all out. Well, that hurt their credit because one of the things that credit scores are decided on is credit utilization. So the ideal thing is to not use your full amount of the credit limit you have.
26 to 30%.
Right. They say that's ideal. I had one customer that if they paid it down from 100%, they went to 75% utilization and it increased their credit score by 30 points.
Yeah.
Which made a difference in the program they could do. It made a difference in their interest rate. So a lot of times it may not be a big thing you have to change.
Yeah.
And why would you, like your point, why would you pay a credit repair company necessarily?
Something that you can do yourself.
And it's an easy fix to do something like that.
And I think, Bob, like just when we are talking about buying a house, understand also like that when you're talking with Bob, it's all confidential stuff. Because there is a lot of like stigmas and shame that's put around. It's like nobody needs to know. You shouldn't also let fear of like maybe things that you know that are in your credit and things like that. In my mind, like when I'm dealing with real estate stuff, there is always a solution for problems, and sometimes we don't understand and we think those problems are so huge. But that's why it's important to find somebody that you can trust and you can have a really honest conversation about those things and not just try somebody in like a program. But this is what I think I was trying to say, not to fall into like just programs that you see on Facebook, on social media. I think you really have like when it comes to that stuff, it's much better to talk with somebody that you trust, that you know that there is not going to be like a lot of judgment. It's like we just want you to be able in the right way, in a good way, to get into a home ownership. You know,
I'm looking at it as you're a friend of mine, and what would I do for a friend of mine trying to buy a house? I would obviously try to give them the best advice on financing, interest rates, and all of that. You know, that all of our clients that we've helped all become friends of ours.
Yes,
because we do the best we can to help them out.
And it's okay also, and that's what it's important like to talk with a lender. And this is like the first thing that we said is like, yeah, it's fun to look on Zillow, Realtor.com and start going to look at houses, because it's okay also to be like, well, it's not now, but it's gonna be 6 months. It's good to have that plan, right? Because it gives you kind of like a roadmap, like to very specific things that you can do to get to home ownership.
Yeah.
So thank you so much, Bob. And then if you want to even know more about this whole financing world, just click on the next video and then you can learn a little bit more about financing and purchasing a home. Thank you.
Bye.
Bye.